Good morning, trading world. It is June 21st, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. We have made it through the holiday weekend, and I think today we get the first test of our temporary tradable bottom. Is it in? Is it set? I don't know. But we will probably go through a series of tests to find out. In order for this bottom to be set, the higher time frames have to lose steam on all of the negative momentum. To a great degree, this has already happened on the weekly chart, and just waiting for the monthly to lose steam. Remember, if we wait for the monthly to completely confirm, you will miss most of the move. This is why I started layering on bull put spreads on Friday, because the monthly still has some negative steam to it. We will most certainly retest the bottom of the range, but this is where you look for higher lows to be put in to verify the bottoming process. Meanwhile, if you're familiar with bull put spreads, we can get paid on both ends by buying back the short leg at the top of the range and then waiting for the retest of the lows to cover the long put side at the lower end of the range. This will be a process that will repeat itself a couple of times. All right, let's bring up the key levels for the day. Before I bring up the levels of the day, the key levels of the day, I just wanted to go back to the 4-hour chart because I make mention of this. I was planning to make mention of this, but I wanted to do before I put the drawings up so that I don't have to take the drawings down to bring it up. Last week, I talked about entering into a volatility box, and we drew a box and divided the range into thirds. And I just want to show you where we are in that volatility box. So if we come down here and we set a higher low, this is definitely a sign to go ahead to get long for temporarily. We know that the overall trend is down or negative, but doing this consolidation, it's going to give us a chance to make money in both ways. I'm not saying, oh, this is buy the dip and we're ready to go and get long for the foreseeable future. No, this is just an opportunity to make money to the long side temporarily. So remember what I said, or go back to it's a pre-market that I did earlier last week where I talked about the type of bear market we're in for, and that we usually see 4 legs of this bear market, and this bottoming process or temporary bottoming process is just the closing out of possibly the first leg. So the box in thirds, the volatility box that we drew last week, it is still in play. It will still work and keep you in a good place when you're looking at positioning yourself for the next couple of days or week. Also, I've been keeping track of the trend channel, and as you can see, I was pretty much saying this a week ahead, well, almost 2 weeks ago, that we were going to test the lower end of the channel, in which that definitely qualifies for a test of the lower end of the channel. And now that we've tested that, I look for a higher low to be put in. And this is going to give us the confidence to go ahead and get long. And this is going to kick off a very strong bear market rally. If indeed we do get the higher low. All right, let's get back to the key levels of the day. All right, here we have the key levels of the day. And, oops, hitting buttons by mistake here. All right, we're going to start on the resistance side for today. Starting at the jack resistance, we have the 373 to the 374 area. Then queen resistance, we have 375 to the 377 area. And then king resistance, 378 to the 383 area. On the support side, we have jack support at 371 to the 370 area. Then we have queen support 369 to the 367 area. And then king support 366 to the 363 area. Hoping for that higher low to be put in somewhere around here. But if we creep down, there's a little more support at the 358 area, where we may decide to complete the bottoming process, this temporary bottoming process. The main thesis for today is bullish, closing above the 365.86 with a projected target high of between 374 and 383. The alternate thesis is bearish, closing below 365.86 with a projected target low of between 369 and 363. Remember, we are still in that vol box that I showed you from last week. The box and third from last week is still in play today, and at some point, the trend channel that I keep pointing out, we will test it. And actually, before I put the levels up, I did show you where we tested that trend channel. The current channel we are in is 364, or major channel is 364 up to 379. The next major channel is 364 down to 353. Keep in mind, if we go up, the next major channel above is 379 to 397. All right, let's bring up the scenarios of the day. All right, our first scenario and most probable scenario is our trend day up structure. We open gap up and start with a fade back toward the previous close represented by the blue line. We are quite a bit away from that previous close, so that fade back could be very big and feel like a trend day down all to itself. But until we cross that blue line or pierce that previous close, we are still in a trend day up type structure. We should find support on or before that previous close and then begin the uptrend. That should take us to maybe a little past midday, and we'll reach our midday chop or our chop at some point later in the day where we'll chop around either the possible queen or king resistance area. It is quite possible that all of the uptrend was done pretty much through the overnight session. So all we will be doing is going back and either testing the highs from overnight, or we could pretty much spend most of the day in this downtrend phase trying to get back to test that previous close. So that's our first scenario. Let's bring up the second. Alright, our next scenario is our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area and find midday chop around either the queen or king support before spending the same energy we used coming down to go back up the second half of the day. This also has a vice versa warning on it that you should pay attention to, and that vice versa we could actually continue up to that effect and find our midday chop around either our jack or queen resistance area before using that same energy that we used coming up to go back down the second half of the day. So that's our rounded reversal day type structure. And I'd like to point out that the last two scenarios, the probabilities are pretty much, are the same. Alright, our last scenario is our expanded range day structure. We can look to set a decision area low boundary around the queen or king support area. And it's going to take us a while to get there because we gapped up quite a bit. And the key thing that you want to remember about the range day or expanded range day structure is that at some point we cross the previous close and close through it, or in this case below it. And with all range days, it's basically we put in highs and a low and we basically chop between the two. But with the expanded range day, we have a bias to one side of that range where we push that boundary. So that's what we're looking at today. Those are the scenarios. I hope this helps. Remember, the box and thirds and conditions like this help tremendously. They help keep you out of a lot of danger and taking on too much risk. So, and as I like to say, the risk part of that, or assessing the risk that you put yourself in, is actually the most important part in trading, is understanding and assessing that risk. Because your primary job is to keep capital, hold on to the money that you have, so that at some point you can use it to make money. So again, I hope this helps. As always, wishing you a positive trading day. Have a great one.